You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 11th day of June, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. Now, the first broadcast, that's our live trading room. So that one's private. Members only, or those who are taking their 1-week free trial. If you have not yet taken your 1-week free trial, go right here to mytradingiq.com. At the very top of the page, there's a big purple button. You can't miss it. Click it, fill out the registration form, hit submit. We'll get your indicators up and indicating today. Your trial will officially start tomorrow. But don't worry, I know the weekend's coming. That doesn't count against your trial. You'll still get 5 consecutive trading days on the trial. So that means you'll get the first 3 days of next week, along with tomorrow and Friday. Now, when you take the trial, you're not just getting access to the live training room. For 5 consecutive trading days, we treat you just like you were a member, a passport holder. We give you access to everything with no credit card required. The reason? We want you to focus on what's being taught, so that at the end of the trial, you can make a well-informed, intelligent decision whether or not trading is right for you. Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and come back for this broadcast, the afternoon broadcast, which is open to the public. That's everybody, everywhere on planet Earth with an internet-connected device. Now, there's 2 different ways to join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com, but this time scroll down the page to where it says Noon Broadcast. Click that link, fill out that 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before the broadcast starts. In the email, there'll be a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. Now, the benefit of doing it that way is you'll have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from the desktop, maybe this time of year on vacation, but you still want to join live. And some days you'll be busy, can't join live, but want to get caught up later. Well, the good news is you can do both of those via our YouTube channel, and it's very easy to remember. youtube.com/CFRN. That's the Christian Financial radio network since 2005. But you don't have to remember all that. Just youtube.com/CFRN. And if you're new to our little corner of the world, it's a great way to get to know who we really are. Thanks to the power of YouTube, you can actually see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Currently, there are over 2,800 daily episodes archived for your educational and viewing pleasure. Now, obviously, you're not going to watch them all, nor do you need to. But it's a great resource to have at your fingertips, and it lets you know we've been around a minute, or 2, or 3. So, this is our afternoon schedule each and every day. Michael will be joining us top of the hour for a recap of what happened this morning in the live training room. Then we'll do some live trading on the TradingView platform for 30 minutes. And then we'll wrap it up with our good word for the day. But we're going to start where we always do, with our daily devotional. Now, as you know, yesterday we wrapped up the devotional that we've been on for a few days, More Than Money. Before that was Biblical Inheritance. If you missed those, I encourage you to check them out on the YouTube channel. Now, the new topic we're starting today and for the next 3 days. God, are you listening? If you were tuned in yesterday, I talked to you about prayer, and that if you have 10 minutes that you can spend in prayer uninterrupted, God already knows what's on your mind and on your heart. What he's looking for is to see if you trust him enough to trust him with the deepest secrets of your soul. 1 minute. You can do that in 1 minute. Spend the next 9 minutes listening to God. Let him speak to you. He knows what you need. He knows what you want. We don't always get what we want, but his word promises us that we will always get what we need. So again, our new topic, God, are you listening? Today's scripture, Genesis 2, verses 16 through 17, and I'm going to share with you from the Message translation. God commanded the man, "You can eat from any tree in the garden, except from the tree of knowledge of good and evil. Don't eat from it. The moment you eat from that tree, you're dead." Now, we all know that Adam and Eve were expelled from the garden, and Adam didn't drop dead that day. But eventually, he did die a physical death. That was not going to happen before they disobeyed God. And the Lord commanded the man, saying, "You may surely eat of every tree of the garden, but the tree of the knowledge of good and evil you shall not eat. For in the day that you eat it, you shall surely die." And he did. This passage shows God speaking a precise command to Adam. Given that the instructions were quite detailed concerning Adam's well-being and safety, one would assume that the matter would be handled more seriously. But we all know the story about Adam and Eve's disobedience. And to Adam he said, in Genesis 3:17, "Because you have listened to the voice of your wife, and have eaten of the tree which I commanded you, you shall not eat of it. Cursed is the ground because of you. In pain you shall eat of it all the days of your life." From the world being formed by God, speaking it into existence. To God rebuking Adam and Eve for their disobedience, to now, he is still speaking to us. In his own words, God declares, I am the Lord, and there is no other. Apart from me, there is no God. I will strengthen you, though you have not acknowledged me. Isaiah 45:5. I'm sure we can agree that Adam and Eve's disobedience is our misfortune. So the question now is whether God speaks, or not whether God speaks, but do we actually listen? Are we picking up the receiver to respond to his call? Are we living by his word? Or are we merely existing and being compromised by the world to ignore it? I want you, over this next couple days, to reflect on a time that God spoke to you, either directly or indirectly. What did he say? What was your response? Write it down. Describe the circumstances that were taking place during this time. I think you'll find it helpful if you write down your reflections. Keep a journal as you continue to record your encounters with God. Let's pray. Heavenly Father, thank you for speaking to us through your word. When we can't hear your voice, we know that you speak through people and circumstances as well. Whenever Satan tempts us to think otherwise, we will stand on your word and counter every lie that he tells. You were the God of Abraham, and you are my God now. Your word will stand forever. It's in Jesus' name we believe and pray. And everybody said, Amen. Now, we had a special prayer request today. One of our members, Jessica, her mom, is, I guess, basically in hospice. So, I'm going to ask you to pray this with me. Her mother's name is Vicky. Heavenly Father, we lift up Vicky Beard to you with love and reverence, knowing you are the author of life and the keeper of every soul. In this tender season, as she walks through the valley of the shadow, may your presence be her peace. Surround her, Lord, with a calm that surpasses all understanding. Let every breath she takes be filled with your mercy, and may your spirit rest upon her with gentleness and grace. Where there is pain, bring comfort. Where there is fear, bring assurance. And where there is weariness, bring rest. We pray for her family and loved ones. May they feel your nearness, and may your hope sustain them through each moment. Thank you, Lord, that even now, Vicky is held in your everlasting arms, safe and secure in your love. May she know without doubt that she is deeply loved by you and never alone. It's in the mighty name of Jesus we pray. Amen. And a scripture to go with that prayer. Even though I walk through the valley of the shadow of death, I will fear no evil, for you are with me. Your rod and your staff, they comfort me. Psalm 23:4. a scripture I'm sure you're quite familiar with. So let me give you the numbers from around the world. We'll start here in the US with the cash markets, or the indices as they're called. Beginning with the Dow, we're up 101 points, but the NASDAQ is down 14. S&P 500 is down about a half a point. The Russell 2000 is up 7. Pretty quiet, and again, the dreaded mixed markets. As futures traders, we love to see all 4 of the major indices the same color. They can be all green or all red. Doesn't matter, because as futures traders, we can be long, short, long again, all in the same hour if that's what the chart in front of us is telling us to do. But when the markets are divided like they are today, what happens is on those beautiful trade setups that you get, you tend not to get the same follow through. Trying to reach your goal for the day, maybe the ES, which is 8 ticks. It gets to 6 ticks and backs off. But remember, you don't have to get your goal for the day in one trade every day. Some days it'll happen, but you shouldn't expect it. If it takes you 10 trades to get your goal for the day, after commission, you're still net positive for the day. In the commodity basket, crude oil is up $1.70, trading 66.68 last. That's a gain of over 2.5%. Gold is up $9.80, trading 33.5320 last. Silver down 31 cents, trading 36.32 last. That's a drop of pretty close to 1%. In the Asian markets at the close, the Nikkei posted a gain of 209 points. Shanghai rose 17. The Hang Seng gained 204. And for the Hang Seng, that's almost 1%. In the European markets at the close, FTSE up 11. The DAX down 38. The CAC down 28. These quiet markets, they're waiting on something. Now, we had beautiful CPI numbers this morning. We'll talk about that in a little bit as we go through the news. Markets ran up, and they ran back down. So you'll see it all when we get to the charts. We had a green day in Asia. It was a mixed day for the UK. And at the moment, it is a mixed Radio Wednesday here in the US of A. So let's go to the news. Got a tragedy in Austria. And let me explain to you exactly what I mean. At least 10 people were killed and 12 wounded after a former student opened fire at a high school in Graz, Austria, around 10 a.m. local time yesterday. The mass shooting in Austria's second largest city is the deadliest attack in the country's post-war history and among Europe's most fatal shootings in 4 decades. The suspect, a 21-year-old man, also died by suicide in a school bathroom. Authorities recovered his legally owned long gun and handgun at the scene and believe he acted alone. Though his motive is unclear at the writing of this article, the gunman's and victims' identities have not been disclosed as preliminary investigations continue. Austrian Chancellor Christian Stocker declared a 3-day national mourning period. Austria has one of the highest civilian gun ownership rates in Europe, with about 30 firearms per 100 people. Larger countries like France and Germany each have around 20 firearms per 100 civilians. Still, mass shootings are relatively rare in the Central European nation. Yesterday's attack marks Austria's third mass shooting since 2000. Scientists have uncovered new clues about how some animals regrow lost limbs, marking a major step forward for regenerative medicine. The study focused on axolotls, which I probably mispronounced, endangered Mexican salamanders, known for their ability to regenerate body parts. The creatures can fully regrow a limb in as few as 8 weeks, replacing skin, bone, cartilage, muscle, and stem cells. Researchers genetically engineered axolotls to glow in the dark to track molecular and genetic signals active during regeneration. They found that a key to the process is retinoic acid, a form of vitamin A that acts like a GPS, telling cells where to go and what to rebuild. Manipulating retinoic acid disrupted proper limb formation. Too much or too little led to malformed limbs with misplaced segments. An enzyme called CYP26B1 was found to regulate the acid, making sure cells get just the right amount to rebuild limbs properly. The findings may eventually help scientists research ways to trigger similar regenerative responses in humans. Man, how great would that be for some of our veterans? Speaking of veterans, Defense Secretary Pete Hegseth said yesterday that 4,000 National Guard troops will remain in Los Angeles for at least 60 days. The deployment, he says, will cost the U.S. military at least $134 million. Okay, now I want to know how this happens, right? If they all took a personal Uber there and got a hotel room for the 60 days, I don't see how that adds up to $134 million, but hey, he's the defense secretary, so I'll trust him. Now, remember, he only had to do this because the governor of California and the mayor of Los Angeles failed to act. The comments came in testimony before the House Appropriation Defense Subcommittee as it analyzed the proposed defense budget for fiscal year 2026. The fiscal year 2026 defense bill allocates $831.5 billion to the Pentagon, matching 2025's levels. An additional $150 billion over 4 years is expected to come through congressional reconciliation plans, lifting spending to nearly $1 trillion. Following Hegseth's testimony, the Republican-led subcommittee advanced the budget proposal, sending it to the broader Appropriations Committee for review. A full House vote is expected as soon as this month. Hegseth was also asked about DEI, diversity, equity, and inclusion initiatives, Ukraine's recent drone attacks, and foreign aid programs. His comments came as protests over immigration raids continued yesterday in at least a dozen cities, including New York and Chicago, and even Phoenix. Los Angeles enacted a partial curfew for its downtown. Now, if you want to protest against the ICE raids peacefully, I guess that's your right. But did you see the looting that's going on in these mom and pop stores? People who've worked hard all their life to build a business, to leave a legacy to their children and their grandchildren. Now, in what way does breaking into these stores, destroying them, and stealing everything in them, how does that support their anti-immigration beliefs? Well, I haven't figured it out. If you do, please let me know. Now, we all know the CPI came out this morning, and it was cooler than expected. But it's not likely to shake the view of most Federal Reserve policymakers that rates should stay on hold until there is more clarity about the impact from President Trump's tariffs. What is it going to take? I'll tell you what it's going to take is probably a new Fed chairman. We'll talk about that in a minute. Some economists were expecting to see higher costs from the tariffs showing up in the CPI, the Consumer Price Index report released today at 8:30 a.m. Eastern. But instead, CPI showed that inflation pressures were relatively stable and even eased on a monthly basis. The core measure of CPI, which excludes volatile food and energy costs, rose 2.8% over the past year in May, matching April. Monthly core prices increased 0.1%, a touch below April's 0.2% gain. They just can't believe their eyes. U.S. and China have agreed to a framework and implementation plan to ease tariff and trade tensions. President Trump signaled his approval, saying the deal was done, pending sign-off from him and the Chinese president. Trump and other officials indicated the deal should resolve issues between the two countries on rare earths and magnets. Trump said today that the U.S. will allow Chinese students in U.S. colleges, a sticking point that had emerged in the weeks following the country's mid-May deal in Geneva. Now, I like Trump, and I like what he's doing. Promises made, promises kept. But I don't think these students should be in our universities. Trump said the U.S. would impose a total of 55% tariffs on Chinese goods. Trump arrived at that figure by adding together an array of pre-existing duties and not any new tariffs. The president combined the existing 20% tariffs over illegal drugs and migration with 10% Liberation Day tariffs and other sector-specific duties in place that average out to 25%, but only apply to certain goods. Outside analysts, such as the Budget Lab at Yale, have calculated that the effective tariff rate on China overall is more like 33%. Well, what do you expect from you? Now, Paul Tudor Jones, one of the greatest investors of all time and fund manager, said President Donald Trump is likely to appoint an uber dovish Federal Reserve chair to accommodate his growth agenda, contending that Treasury Secretary Scott Bessent would likely be his pick when Jerome Powell's term ends next year. Jones, 70, said in an interview with Bloomberg Television today that two people being floated for the appointment, Bessent and Kevin Warsh, a former member of the Fed Board of Governors, are fabulous names, but Trump's focus on growth and loyalty make Basent a standout candidate. Tesla stock rose over 2% in early trading today after CEO Elon Musk said overnight he regretted some of the comments made about President Trump last week amid their public fallout that saw more than $150 billion taken off Tesla's market cap. Musk posted on X, "I regret some of my posts about President Trump last week. They went too far." And I personally thanked him on X. Let's go to the grocery store. Egg prices fell 2.7% in May to headline a month that saw grocery inflation rise from the prior month, but continue to moderate as consumers search for relief from high food prices, which have weighed on household budgets for years. Remember, Trump's only been in the office less than 6 months. Food at home prices have now increased by less than 0.5% each month since October 2022, and monthly grocery inflation was below this threshold just once between June 2021 and October 2022. We know under Biden that we saw the highest inflation in, 45 years? Today's CPI index report showed that the index for food at home rose 0.3% last month, a rebound after recording a 0.4% drop in April to mark the largest monthly decline since 2020. From Bloomberg, gold rose today after a softer than expected inflation reading, bolstering bets that the Federal Reserve will cut interest rates later this year. You see, a low CPI number, while it's not good for the US dollar, it's very good for gold and silver. In the world of AI, some investors are questioning the amount of cash big tech is throwing at artificial intelligence, fueling concerns for profit margins and the risk that depreciation expenses will drag stocks down before companies can see investments pay off. On a cash flow basis, they've all stagnated because they're all collectively making massive bets on the future with all their capital. According to Jim Morrow at Callodine Capital Management, we focus a lot on balance sheets and cash flows, and so for us, they have lost their historical attractive cash flow dynamics. They're just not there anymore. Alphabet, Amazon, Meta, and Microsoft are projected to spend $311 billion on capital expenses in their current fiscal years and $337 billion next year, according to data compiled by Bloomberg. That includes a more than 60% increase during the first quarter from the same period a year ago. Free cash flow, meanwhile, tumbled 23% in the same period. And last but not least, it kind of is least, Mexico's central bank may pause cuts to its benchmark interest rate in the face of an inflationary rebound, according to Deputy Governor Jonathan Heath in an interview with local newspaper El Economista published today. Mexico's annual inflation rate accelerated in May and exceeded the upper end of the central bank's target range of 3%, plus or minus 1 percentage point. We expect this small rebound to be temporary or transitory, as Janet Yellen told us, and for inflation to resume its downward trajectory in the coming months. I hope they're right. All right, that's it for the national news. Now let's go to the good stuff, our local news. Logic 247. That is our 24/7 around-the-clock E-mini alert service. It's not just E-minis, it's also crude, gold, and silver. We are currently in week 358. Over the last 358 weeks, we have issued over 19,800 individual handcrafted alerts. In fact, we're closing in on 19,900. Now, Valerie did the recap this morning at 6:30 a.m. Eastern. So some things have changed since then. But at the time she did the recap, since the markets opened Sunday night at 6 p.m. Eastern, we issued a total of 41 alerts. We're still waiting on the outcome of 13. That gives us 28 actionable alerts, of which 3, or 11%, would have been stopped out based on market structure and a simple process we teach all of our passport holders. Now, over the last 358 weeks and over 19,800 alerts, what we've averaged on a weekly basis is 20% or less of the alerts being stopped out. Again, based on simple market structure and the simple process we teach all of our passport holders. Every logic alert has an entry price, an initial target to help you get your goal for the day, additional targets, and a final trade to target. Yes, you can trade them, but the real purpose of the logic alerts is to help you learn how to read a chart. If you go to medical school, you got to be able to read the medical textbooks. If you want to be an attorney, you got to be able to read the law books, the law review journal. Follow me? But you see, if you want to become a trader, you got to be able to read the charts. And when you look at the charts, there's no words, sentences, paragraphs, or punctuation. It's a whole different language. And if used properly, these logic alerts will not only allow you to take some great trades, but they will teach you how to read the chart. Now, the logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. Last week we finished up with 8% stopped out. Today's only Wednesday, so we may drop into the single digits before the week is out. Now, 358 weeks, that's a very long time. But years before I came up with Logic 247, we had our original alert service, the concierge trade alerts. They're different. Different how? Well, number one, they don't come out around the clock. They are posted 5 minutes ahead of the Globex Open each evening. Today's the Wednesday session, but the Wednesday session started last night at 6 p.m. Eastern. So, day before yesterday, I got them out 3 minutes ahead of the open, but I try to get them out 5 minutes ahead of the open every night. Now, what that means is simply this. All of our traders and all of our trial members had all of these targets 5 minutes before the market opened last night. ES, that's the S&P 500, the Dow, the Russell, crude oil, the NQ, NASDAQ, gold, and silver. So, as we go through the individual charts of each of these markets, keep in mind, if you're one of our traders or on the trial, you had the targets 5 minutes before the market opened. So now we can actually go to the chart. My personal favorite part of the day. No, my favorite part is the devotional. Let me just be honest. Okay. This is the daily chart of the bellwether, the S&P 500. And we put in a high today so far of 60.74.75. Now we mentioned yesterday that our next major resistance was 60.57. The next major resistance is 60.70. And then the next major resistance is roughly 61.06. So we put in a high today at 60.74.75. We actually took out both of those highs right here. Okay, but look what happened. Price quickly got rejected. Now this green line, it's called the BBC. It stands for Bull Bear Cross. When price crosses below the green line, we're bearish and expect lower prices. When price crosses above the green line, as it did on April 24th, we're bullish and expect higher prices. That's pretty simple. But price always reverts to the mean. In our case, the mean is green. We call it the BBC. And what's really cool is when price pulls back to the BBC, it holds more often than it doesn't. Here, 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 here. But we know eventually it will trade through. Okay? And look what happened on the first pullback from above. The pullback held. Then we got a big leg and the pullback held. And that brings us to where we are right now. So really, if we can overcome today's high, our next major resistance will be at this bearish cross. That's when the red line gets below the green line. When that happens, when you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance, at least the first time up. Now the same is true of a bullish cross. That's when the blue line gets above the green line. The first time price revisits that area, if it does, that will most likely be good support, at least the first time down. And once we take this out, right now these are reverse fibs because of the downtrend we've been in. But once we get above this bearish cross, I'm going to shift. You see, in a downtrend, you draw your fibs from the high to the low. But in an uptrend, you draw from the low to the high. Now, it takes longer for price to rise than it does to fall. For price to rise requires financial commitment. For price to fall, all that has to happen is the institutional buyers hit pause on the buy side and price just naturally deteriorates until price gets so low and it becomes so compelling that the institutional traders dive back in. So coming down, we had a leg, a retracement, a leg, a retracement, and a leg, and a retracement. And right here, when we failed to put in a lower low, that was an indication the trend might very well be over. And so we got a leg and a retracement, leg and a retracement, leg and a retracement, and here we are. Now, I know you don't trade the daily chart, but whether you trade stocks, futures, crypto, Forex, ETFs, doesn't matter. Price flow is the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over again and again. It's a never-ending cycle. I challenge you, whatever you trade, spend 2 minutes with the daily chart before you drop to your smaller time frame and actually start trading. Number one, you're going to get a free look over the shoulder of the deep pockets that actually move price because of their account sizes. And while we had a bullish run up off that news this morning, now what do we have? A doji. And what does a doji represent? Indecision. Yeah. So they're a little perplexed right now. They're not actually sure what they should do or not do. We always trade what's in front of us, and that's when we move to a smaller time frame. Now, all alerts, the Logic 247 alerts and the Concierge Trade alerts, are created on the 30-minute chart. Nothing magic about 30 minutes. It's just the time frame I chose years ago. And they say if it's not broke, leave it alone. So I have. The vertical line separates today, Wednesday, from Tuesday. Back over here is Monday. Now when price drops to this horizontal line, this is the weekly trading zone, which we've published every week for almost 15 and a half years. When price drops to a weekly trading zone, we expect support until proven otherwise. When price rallies up to a weekly trading zone, we expect resistance until proven otherwise. Back to support, back to resistance. It's kind of a beautiful thing. Now, yesterday on the live broadcast, we drew two windows. You see, we don't care if the market goes up or goes down. I mentioned that earlier, right? So I said if the market chooses to drop, here's a great window of opportunity. And if the market chooses to rise, here's a great window of opportunity. Beautiful thing about the windows of opportunity that I teach you how to create is once it fills, chances are it'll fill again, and maybe again, and maybe again. This was the opening candle last night right here. Remember, all of our traders and trial members had these targets 5 minutes before the market opened. Now these are 30-minute candles. On the third 30-minute candle, we hit the long target. More than enough to get your goal for the day. Now when the market finds resistance, it's going to go look for support. Blue and climbing turned to red and falling, and it took price down basically to this low right here. Now I was keying my short target off the top of this window, or this low right here, but price only dropped to this low. That's okay. Still plenty of room on the downside to get your goal for the day. This one candle right here opened at 60.29 and dropped to 60.24. It's 5 points in that one candle. You only need 2 points to get your goal for the day. Now when red and falling turned to blue and climbing, that sent price back above the BBC. And where'd we find resistance? At the zone that was published Monday morning at 6:15 a.m. Eastern. We publish the zones every Monday morning, 6:15 a.m. Eastern, and once they're published, they're carved in stone for the entire week. They do not change in any way whatsoever. So the market found resistance at the zone, which sent price back to the BBC, and the pullback held. The pullback holds more often than not. Even when you spike it like this, look where price closed on that 30-minute candle. Pullback held, the pullback held, the pullback held. Then when we got below the BBC, the pullback held. And then when we got above the BBC, the pullback held, and it held. We hit the long target. This was that 8:30 news econ report this morning, the CPI numbers. Sent the market up substantially. And then, of course, as you know, price rarely travels in a straight line. So when we get a big move like that, what do we expect? A retracement. Price always reverts to the mean. So the pullback to the BBC held. Okay, institutional buyers attempted another rally to take out the high of the session, but they failed. What does that tell us? To expect lower prices. But so far, the pullback is held. Now notice on the way up, the black step line was on the left side of blue and climbing. That's bullish. But once that step line crosses to the right side of blue and climbing, that's bearish. Now we had support times 2 here, the BBC and the weekly trading zone. And we're attempting to print a green candle. But because the step line is directly above price, that's potential resistance. Blue and climbing is directly above price, that's potential resistance. This little double top here is potential resistance. But if the market can overcome all that resistance, then you got a beautiful opportunity up here. Oh, now my windows are always conservative. We'll call it 60.67 to 60.72. It's 5 points. Only takes 2 points to get your goal for the day. Now, what if blue and climbing turns to red and falling and price gets below the BBC? Then my window of opportunity is going to be right here. See, I'm keying off that wick from yesterday. That's a beautiful window of opportunity, 60.21 down to 2017. 4 points. Only takes 2 points to get your goal for the day. And if we should trade through the short target, then we've got this window that was drawn yesterday. Remember, this window was drawn yesterday. Okay. On the Dow, here's where we opened last night. We're above the BBC, so we ran right up to the long target. We missed it by a few ticks. We got to 943. Target was 950. We missed it by 7 ticks, but it was plenty to get your goal for the day. Now, when the market finds resistance, what's it going to do? It's going to go look for support. And where did it find it? At the short target, which was based off this low right here. That, my friend, is simple market structure. Support is going to send the market looking for resistance. You see this bearish cross right here? See this resistance right here? That set us back down to the short target again and to the zone 42,740/45. That support set us back up almost to the target again, really putting in a double top right there, see? But then that 8:30 CPI news came out and boom, looked like we were going to the moon, but before the 30-minute candle closed, we were back to the top of the long target. We consolidated, retraced to the BBC, the pullback held. That sent us right up to the zone. Remember, when price drops to a zone, we expect support till proven otherwise. When it rallies up to a zone, we expect resistance till proven otherwise. Now, you can see the step line has crossed blue and climbing. So what do we expect? A retracement back to the BBC. On the Russell, this was the opening candle, and the second 30-minute candle took us right to the target. Okay, now this candle opened at 2161 and ran up 4 points and a little beyond to 2165. That's 4 points. You only need 2 points to get your goal for the day. Resistance will send the market looking for support. Where to find support? At the weekly trading zone published Monday morning at 6:15 a.m. Eastern. That's where it spent most of the overnight session. And this morning we got a pop. Took us oh so close. We made it up to 64.30. So we missed it by 7 ticks. Resistance sends us back to support. Back to resistance. Back to support. There's the 8:30 news. The Russell went wild. And then down we come. The pullback holds. So we got a high, a lower high, a lower high, and a lower high. That tells you to look for lower prices. And we got support at the weekly trading zone. Now we're below the BBC, and it looks like blue and climbing on the next candle may potentially turn to red and falling. If that happens, we may trade through this zone. I would wait to take out these lows from overnight, and my window of opportunity would be 21. You know what? I think I would leave that alone. There's just not enough room for, no. I take that back. 21.54. Nope, because these lows here, nope, leave that alone. If you're gonna trade it, if price starts to drop, be patient and let it get down here. Okay, that's your best bet. Now on the upside, because of all these wicks sticking up, you got a nice, sweet, massive window of opportunity up there. Michael's here, so we will pick up on the NQ, where you can see off that 8:30 news we hit the zone to the tick. We missed it by 1 tick, I think. 22.106. The zone is 22.105/106, so I guess we did hit it to the tick. But I'll go into more detail when I come back. Right now, Michael's going to give us a recap of what happened in the live training room this morning, then do some live trading on the TradingView platform. Then I'll come back, finish my recap, and wrap things up with our good word for the day.
Excellent.
Okay, your screens look fine.
Great. All right. Well, here we go. Let me just check and see who all is in here today. All right. Here we go. Good afternoon, everyone. Today is Wednesday, the 11th day of June, 2025. So, if you have not taken a free trial with us, go ahead to mytradingiq.com, click on the purple button right here. There's no credit card required for the trial. Just click on that purple button. And when you click on that, it is going to bring you to this registration page. On this page, all that we ask for is your name, your email, and your phone number. Okay, down at the bottom here, all we ask for is your TradingView login ID. If you don't have one of those, click on this button right here, follow the instructions, and get one. All right.
Hey, Michael.
Yes.
You know, you asked us to pray for Jessica's mom today.
I did. Yes.
We did it right at pretty much the beginning of the broadcast. So if she's not here, you can let her know, and we will continue to pray for her.
Thank you. I forwarded what you had sent to me to her.
Awesome. Okay. All right.
Thank you.
It's all yours.
All right. Yeah. So what you got to do is click this thing right here, and that will tell you how to get a TradingView login ID. Just get that ID. Get in here. Hit register, and we'll get your indicators indicating for you, and we'll get you access into the room in the morning. Right, so we had a pretty slow morning today. I had 3 stop outs, and 2 of those were because of mistakes, and those 2 stop outs is about doubled what we had here. Right? I had 1 on the ES for -10 and 1 on the gold for -15. So let's just put that in there. If this were 65 and this were 1, $597 is what it would have been. But as it was, that is how it was. 332. So it's just about double with those two stop outs that were mistakes. It was one other stop out that wasn't a mistake, but it is what it is. I make mistakes just like everyone else. But today is the 11th day of June, 2025. Minus 13 on the Russell, plus 50 on gold, minus 9 on the ES. Put us at 322.50 on the morning session. That is not the lowest day of the year. The lowest day of the year is 170 something in January. We did get our goal for the day on the very first trade. One trade, 1 minute, $2,500. It was a 25-day gold trade. We pulled 18 trades off today. So on a month now, we're got kind of a slow start. We're only averaging $817 per day so far this month. That's over 6 business days. We're averaging $817 per contract per day. Now, on the year, we're at 145,377. We slipped below 1,500 per day today on the year. We'll get that back up by the end of the week, I imagine. Anyway, over 97 business days, averaging $1,498 per contract per 2-hour business day. Now, if you follow the 2420 blueprint, and you added 1 contract per month, it'd be up to 6 contracts right now. And you'd be up to 6 contracts right now. If you quit trading when you got your goal for the day, my goal is $100 per contract. And you quit trading then, and you added 1 contract for every $2,000 that you earn in profit. You'd now be at 6 contracts minimum, and you would have had to work only 12.11 hours so far this year, and you'd be up $52,000, averaging $4,291 per hour. Okay, $4,291 per hour. And that is how the day went. All right, the day, the month, the year. Now we get into the trades. We had more trades on gold than anything else. So we'll come back to the gold. The MES is saying there's a buy going on right now. The last time it said that was back here. I believe it was way back in here somewhere, back here. Anyway, let me go to the end right here, and we'll start out with the NQ. We only had 1 trade on the NQ today, and it was a break even right here. All right, I ended up doing an aggressive trade on that. All right, that's how I got to break even. It didn't. If you did the conservative trade and you waited for the down close, you did not get any profit at all. You would have stopped out. But I did the aggressive trade, taking it from the open on that one, and I got my stop to break even on it. And that was all that I did on the NQ today. So that's all there was. That's all that I did. All right, and that was it. All right, the ES will do next. This was my mistake on the ES toward the end of the session, and the only other trades I had this one right here on the ES. We stopped out on this one. It was a valid stop out, minus 10 ticks. Then we got 4 back on that, put us at minus 6, and we got 7 right there, put us at plus 1. And then I made a mistake on this one. I should have had my stop at break even on that, and I didn't, and it stopped me out. That was right at the end of the session too. That put me at minus 9 on the ES. Now, during the break, well, what you would have been looking at right here is this. Once it broke the YBR, you would have been going from here down to here. So you could have been shorting right here. Right here, you would have been shorting. It would have been a really nice trade. Next one did more than 100% pullback. It actually stopped right here. You could have shorted right there, and that would have stopped you out. I think you could have shorted aggressively on that too, which wouldn't have stopped you out. Yeah, you could have shorted aggressively on that, which would have gotten you break even. But then it pulled back some more. The next one was, you've been looking for it to get into the overbought. So it was from here all the way over to here is what we've been drawing. Okay, let me just draw it for you. From there all the way down to there. Stretch that out. That's what you're looking at. All right, there was no pullback deep enough in here to really take a decent trade off of that. But then the next one started, and it went from there down to here. Okay, there was no good spot for that either. The 100% retracement rate in here is something you could have done. And then the next one went from here all the way down to there. All right, So right in here, this down close right here would have been one you could have done off of that. Right? No, I'm sorry, you can't, because this would have been the one right here, and it didn't go down into the oversold, so you wouldn't have to trade there at all. Then it changed directions and it went up here. Okay. So now right in here is what you're looking at. And this, where it came out of the oversold right here, would have been a great spot for a trade. Right. And then you're looking at this. It's really got crunched up in here. This to this, which is no good. Then up to there, which gave you something right here. Okay. And that is how it all worked out during the break on the ES. All right. There were some pretty nice trades there during the break on the ES. The Russell, which we ended up with minus 13 2 days in a row. So we had a few break-even trades in there. We started out we started out here on the Russell with a +1, and then we had a break-even. Then we had another +1. They got us a +2. Then we stopped out there, put us down to minus 13. Had a break-even and another break-even, and that was it. Now during the break, well, if I do it all over again with you, right here during the break, let's start here. Right, it would have been from there to there actually to begin with. That's not going to be a good spot to trade. So then you would have gone from here to here. So stretch that out. You would have had a good spot right there to trade. All right. And then you would have gone from here to here, which would have given you an opportunity to trade. Not a great one, but it would have given you one. And then you would have ended up going from here down to here, which would have given you a good spot right there to trade. All right. Then from there down to, we'll say right here. All right. And that would have given you a decent spot right in there to trade on the down close, conservative trade right in here on the down close. Then it would have gone like this all the way down here, giving you nothing because this was not a good spot to trade and didn't go all the way down. So you wouldn't have done this one. So then you would have switched over here, giving you a pretty good spot right here to trade. Would have gone sideways for a little while. Might have gotten a break even right there. You might have stuck it out and gotten some profit in it. And that would have changed everything to here, to there. Okay. And that would have been a good spot to trade, given you had this right here. All right. And that brings us to where we are right now. From there up to here, where we don't have a good spot to trade. And even if it pulled back again, it wouldn't be a good spot. So you want to see this go up, and you want to see an up close like that right there. And now we'll pull back. Give you some opportunity on the pullback. Okay. And that was the Russell. We ended up with minus 13 on the Russell today. All right. Now the gold. Gold had some decent movement here during the break. Big legs, a couple of them. We go all the way back here. All the way back here. This is where we got our goal for the day on this very first trade, plus 25 ticks right there. Then we followed it up with a 9-tick trade that got us to 34. And the next trade we had was over here, which was just about 20 minutes later, got us to 44. We got 10 more ticks, got us to 44. Then somewhere in here we stopped out, went down to 39, then 29. Then we went from, okay, well, I didn't add this one in, whatever this was before the stop. Oh, I'm sorry, we didn't add this one in. That was another 10 ticks. We actually had 10 more there. Okay, we have to change that because this was 10 ticks. I remember that being 10 ticks. We got 10 ticks there, and that put us up to 54. And then we stopped out here, and that would have brought us down to 39. Okay, and then we went from 39 to 50. Well, that would have been 39 to 60 on this one. And then on the last one, went from 60 to 70 on that one. Right. I'm pretty sure that's right. See. No, this would end up being 60. Anyway, let's go back in here and see what happened. Okay, so we went from 44 to 54. Then we stopped out there, brought us down to 39. Then we had a plus 11 there that got us to 50. And then a plus 10 that got us to 60. And then we had a break even, another break even, and another break even. And that was it for the morning session. Okay. So I gotta change this to, hang on. This goes to 19. Okay. And let's see, in here now, this was 100% retracement. That happened right after the close. But we would have been looking at here, once it flipped the YBR down, you'd have been looking from here down to there. So not really anything you wanted to trade in there, but then you've been looking from here down to here. 100% retracement right there. Then you've been looking from there all the way down to here. So you had no real good opportunity to trade in there. That would have changed things. Once you got into here, that would have changed things. Okay. Looking at this right in here, all this junk right in here. Could have been aggressive here, or you could have been conservative there. I'm not sure I would have done either. Flip the YBR in here didn't really give you anything good in here either. You would have been going like this from here to right there, flipping the YBR. Right. I don't know that I would have done anything in there. It flipped it again. When it flips it again, you got to go from here. It would have been right there to there. All right, that would have given you an aggressive, a conservative down close right here. We could have taken that short right there. That would have been fine. Then it got all jammed up, so you wouldn't have done anything for a little while, and so you got this all the way down here, and from there to there. I wouldn't have done anything right here. Then it flipped the YBR, and you turn up like that. This would have been a good trade to take right here from the midpoint. Then it flipped the YBR back down, and you'd be looking at this. So this would have been a pretty good trade to take right here. Okay, and you see how it's just kind of working its way back and forth and back and forth. So right here would not have been a good place to trade. Then it goes down to here, and this top goes down to right there. So right in here is a pretty good place to trade, and that is right now on the gold, right? Yes, it is right now on the gold. Okay, I just shorted it right here on the gold. Here it is. Okay, put this window on top like that, and that's what we're looking for. That's it. All right. Does anybody have any questions about any of that? All right, so if you haven't taken a free trial with us and you want to, go here to mytradingiq.com, click on the purple button right here. Click on this purple button. There's no credit card required for the trial. Click on that purple button and it's going to bring you to this registration page. Just fill out the form. All right, once you fill out this form, down at the bottom, click on this link to give us a TradingView login ID. Make sure you give us that, and we'll get your indicators indicating for you. And get into the room in the morning so you can start trading with us. Okay. All right. So here we are. We have a short trade over here. This is a conservative short trade over here on the gold, where the down close was right here. Right there at the midpoint. Okay, now the entry point should have been here at 46.3, and I got in at 46.5. So that's even a better entry than the 46.3 one. Looks like it might still stop me out. We'll see what it does. We need to go 5 ticks into profit, which it hasn't done yet. So when you see 5 ticks in profit to get stopped to break even. On the ES, this is what the retracement looks like right now, and that's going to stop us out. There it is. All right. Now, if I'm trying to think right now. One of our members asked me something during the break, if I could automate this, and I was just looking at them trying to think of how I could automate it, because I did automate some things. You guys remember in the in here the context PP, when it loads up, I'll show you what I mean. Here it is. Okay, inside the context PP, you can go all the way down here and draw lines. In inputs, you can show the target lines on the chart. Okay, and show recent swing high on the pivots on the chart. This is a trade here on the Russell. Hang on. So, given that information, the pivot's way too far back here, but if you were going by this right here, where it came out of the oversold, you would want the last swing high pivot, which would be right there. I would have to change the parameters around that. I think that is a parameter that I left in there. Let me just see. Did I leave it in there? No, I did not. Okay. It's not a parameter that I left in there. The Russell, the trade I just told you about on the Russell, that's starting to run. And move that stop to break even. Actually, going to lock in 10 ticks on that, because I am negative 13 on the Russell on the day. So now we're only negative 3. Right, that was this trade right here. I did mention it. If you look at this right here, from right here up to right there. Okay, it was right there. The up close where it came out of the oversold. All right. So back over here now, what I was looking for. I was looking at the pivots to see how close the pivots were. I'd have to make the pivots be really close, like the most recent swing high pivot. Let's see if I can figure that out. If I can figure that out, then it's just a matter of figuring out where the most recent high and most recent low is. Interesting. I'll give it some thought. Anyway, yeah. So over here, you would have been looking at this from here up to here. Right, so that right there on the Russell, that up, not the Russell, the NQ right there, that up close right there on the NQ is a pretty good spot. It would have been better to do the aggressive trade from down here at the midpoint. You'd already be in the profit on that. Conservatively, you could take it from here if you want. It's got to go just up to there. It is something you could do if you wanted to. You know, on the Russell, the one that I did do over here on the Russell was from here. Right there. Right, that up close right there where it came out of the oversold. All right, so this is, oh, the NQ, the NQ. Gosh, I totally forgot about that. I'm going to go to break even on the NQ. It's like my third time today. I've forgotten about it. And we're getting out with just 1 point on the NQ. Get my head back in the game here to being off for 4 days. All right. So this didn't put in a higher swing, but it did get into the overbought. So you'd be looking for a pullback right here. It's the same place. It's not really doing anything in here. The only thing you can do here with this, with the Russell right now, it's in chop. So I would be looking to go for an aggressive trade here on that if you're going to do anything. Kind of the same thing. The gold has gotten into some chop too. So if we get a down close Actually, you could do aggressive right here, aggressively long right here. On this down close, I put you into the oversold. It's not really a great spot. You're just looking at this. It's 100% retracement right there. It's not really the greatest of spots, but it's something you can consider. On the ES, you're going to have a down close here. If you get a down close here, it's going to put you in the oversold right there. Okay. Now, what I was saying this morning is when you get into chop, if you want to change techniques, you can change techniques and go to aggressive trades. The simplest thing to do would be trading in the direction of the YBR. Like in here, because you're below the YBR on this, every time every time it goes into the overbought, you would sell the open of the next bar. Right? Every time it goes into the overbought, sell the open of the next bar. Okay. So on this one right here, when it got into the oversold, you could have bought the open of the next bar. That's not really in chop though. I did the conservative trade when it came out of the chop there. And so that's all we're looking at. All right, it's 121, guys. 121. I don't know if anybody has any questions at this juncture, but I am happy to answer them if you do have them. Okay. Anybody? Anyone? Bueller? Sent chart in ES and Telegram. And go check that out. Well, here you are. 2 good trades or just the first one. Well, you're doing it off the ribbon there too, it looks like. But let's just look at the timing on that, right? Is that ES that you're looking at there, Paul? Okay. And it's this spot right here, isn't it? It's right there. So the first one, when it pulled down, what you would be looking at, let me just redraw this for you so you can see it. All right, what you'd be looking at, you would have been going from all the way down here, all the way up to there. So this first one that you did right here, that was a good conservative trade right there, right, coming off the midpoint. And then you would have had to redraw starting from here up to here would have been really the next one. So that's just this little bit. Now you did from over here is where you went long. Okay. Yeah, I see that. If you stretch this out like that, from over there where it came out of the oversold, you're coming off the 100% right there. So yeah, that would have been okay right there too. Okay, coming off the 100% conservatively right there, that would have been okay. It would have been a little bit like this, though. It would have been more like that. A little crunched up. Not really the best place to trade because it's a little crunched up in here. But not horrible. You know, the first trade that you took was okay. That one right there. You got some profit on that. And then the follow-up trade that you took right here was a little crunched up, but it looks like it gave you an opportunity to get some profit into there too. Okay. That is this one, right? If I put that on there, if I put the whole context on there, you're looking at this, what you have on, you have that and that. The leading and trailing edge of the ribbon. Right. So right in here was where you took your second trade, right in here. And that's okay. No, you could have taken your third one right here. If you wanted to. You've been going from here up to here. The third one, right? Where it came out of the oversold back here. So the high and low between here and here. Put you right there. That would have been a good trade right there too. You see it? And then the high and low between here and here. That was the video that I made. For those of you guys who weren't there this morning, I made a couple of videos this morning because I got a call last night from one of our longtime members asking me for some clarification about where you should draw the retracement lines, what determines, some hard, concrete rule about where to draw the retracement lines. And I made a video for that this morning from the morning session. I stuck it out here in the TIQ videos thing. I actually made 2 videos this morning down at the bottom. Did I make 2? I made 2, but I only put this one out here. All right, picking where to draw the retracement lines from. That right there, I drew this morning, and I did another one this morning too. I'm almost sure I did. Let me see. I can find it. Videos, files. Let me hit refresh on this. I did do another one. I don't know what it was of though. Oh, okay, I remember what this is. Okay, that next video that I'm going to put out here right now, You can go watch this one too. It was how to flip, how and why to flip between I did that one this morning too. So that's out here in this TIQ video section, okay, in Telegram. That's open to the public, so anybody can go in there if they want to. Right, and that video will be out there in just a minute or 2. Okay. I think that, when Cliff called me last night asking for that clarification, it made it pretty clear to me that I needed to clarify for everyone. So I'll try to make that's obviously why I'm going through all these steps right now, showing you step by step every single one that happened this morning. It's like right here, it came from here to here. So you had this pullback right here, which would have been a pretty good spot to enter on the up close. Then you have this from right here up to here right now. Okay, so it converts to there like that. That's what you're looking for. Right, so when it comes back down, gets into the oversold, you'll have an opportunity to trade, hopefully off the midpoint here or something like that. Okay. All right. Let me save that. I'm going to get rid of the lines in the context, but that is, just so you know, inside the context, that is the BBC ribbon and the BB3. The BB3 is the leading and trailing edge of the ribbon. That's all you really need to see. When you're doing it this way, that's all you really need to see is the leading and trailing edge. Good. I'm glad that they helped me out. See, it's a pretty nice feature, having the ribbon in there and having all this stuff come together the way that you would expect it to come together. All right. Wow, it's already 13:28. We only have about a minute left in here, so let's see if we can get any more trades off. I don't think we're going to, but over here on gold, we need a pullback up to about right here. Right here. Ooh, we might get one there on gold. Pullback needs to come up to about right here. Okay, and on the Russell, we need a pullback to about right here. On the ES, it's right there, and on the NQ, we already had it. Okay. This is almost the spot here on the gold. Let me draw it for you. There it is. Okay. So I drew my thing pretty much the right place. Now we already had the up close, so that's not going to be a good place to enter right here. If you get a down close right here and it comes out of the overbought, then you look for a pullback, so you stop and be up above this level right here. Okay. There it is. So now a down close from right here would be a good spot on this. It's 1:30 and I have other meetings coming up, so I can't really stick around for this, but a down close on this is 44.8 down to 43.8 is what you'd be selling right now. Now 43.6, 44.6, I guess. Right? Yeah, 44.6. It's gone all the way up here. 45.6 down to 44.6. Be right there at the midpoint. That's what you'd be looking for here on the down close. On the gold. All right, so let me show you this one more time. Okay, looks like we might get that down close right there. We just did get it. Oh, here it is. Here it is. Hopefully those come to fruition fast enough so I'll be able to bump my stop to break even, maybe take some profit on it all at the same time. What it should do right now is work its way all the way down here to 41.6, and we're only looking for 42.1. That's 25 ticks right there. Anyway, let's do this. Okay, it's always on top already. Say this: if you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button right here. There's no credit card required for the trial. Click on that purple button. It's going to bring you to this registration page. Just fill out the page. Once you do that, we sent a link to get into the next session, to get into the room in the morning. Make sure you use your TradingView login ID. If you don't have one yet, click on this link. It'll have has a video that shows you exactly how to get your TradingView login ID. Send us that TradingView login ID. Okay, once you do that, we'll be able to get your indicators indicating, get everything running exactly the way you need to be running to get into the room so you can start trading with us in the morning while you learn. All right, and that is it. With that, I'll pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yes, I am.
Excellent.
Okie doke. Recap of the recap of the morning session.
Today it took 1 minute and one trade to get to $2,500 with 10 contracts on.
Well, that's about as good as it gets.
Yes, that is good.
Nice job.
5 out of the last 6 days.
Nice job.
Thank you. Thank you very much.
Okay. All right, guys, we're going to pick up where we left off. Now, for those of you that missed all the beginning, my feelings are a little hurt, but I'll get over it. I covered all the markets in detail, and we'll take a quick look at all of them one last time, just briefly. But if you want the in-depth look, then go to youtube.com/CFRN about an hour after this broadcast, and it will be there for you in its entirety. Now, on the NQ, here's where we opened last night. On the third 30-minute candle, we hit the long target and then some. Okay. Now we opened at 21,973. So that's okay. We opened at 974. So to 992, that's 18 points at $20 a point. That's $360 per contract traded, just from right there up to there. There's a little bit more. Okay. All right. So when the market finds resistance, and of course the resistance was based off yesterday's high, which we took out by just a little bit, and then we came back to the BBC, pull back holds more often than not. Like it did here, like it did here, and like it did here. But eventually it'll trade through. And when you got a lot of red and falling, chasing price, that's when you can expect it to potentially go under. But it didn't go under too far. Okay? If you look at the low right here, it lines up right here. Market structure. So red falling turns to blue and climbing, which is bullish. That pushes us above the BBC and to the weekly trading zone that was published Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. So resistance sends us back to support at the BBC. The pullback held. And then at 8 o'clock, we shot up basically to the target. Maybe we missed it by a little bit. Let's see. high was 92.75. Actually, we overshot it by 3/4 of a point. Then came the 8:30 news, which sent us up to resistance at the weekly trading zone. Resistance always sends the market looking for support, which it found here, support times 2. Remember, when price rallies up to a zone, we expect resistance till proven otherwise. When it drops to a zone, we expect support till proven otherwise. But also, the pullback to the VBC, because it holds more often than not, that creates a scenario that we call support times 2. So from support, the market did try to rally again, but it failed to take out that high from the news. So we dropped back to the VBC, spiked it, but it held, and it's still holding, but red and falling has now showed up, and we're printing a red candle. So if we trade through the VBC and we trade through the weekly zone, then you might enjoy this right here. Now that doesn't look like a lot, okay? But let's call it 21, let's call it 935 to 920. 15 points, $20 a point, $300 per contract traded. Okay? Now, even though we have red and falling, it's possible we find support here and we overcome red and falling. If that happens, then you get a little window here, certainly enough to get your goal for the day. Shrink it down a little bit, and then if price overcomes that high right there, and you got a real sweet spot up here. Now my windows are always conservative. You see the top is before you get to the zone, and the entry, the bottom of the window, is considerably above this previous resistance. So no matter which way the market goes, if the NQ climbs, we got two nice windows of opportunity, and if price drops, we got a nice opportunity there. Now if we start dropping, you know, you got potential support here, 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 but then you get down to here, and this would be a most excellent window of opportunity. All about market structure. And again, if you want to trade for a living, you got to learn to read and speak, I guess, the language of the markets. Unlike doctors, you got to read the medical books, and attorneys who got to read the law review and all their legal textbooks. The chart has no words, sentences, paragraphs, or punctuation, except the ones that I type in, based on my ability over many years to learn how to read the chart. So reading the chart lets you know where to anticipate potential resistance and potential support. Our indicators in the weekly trading zones make that task much simpler for you. And if you learn to read, or if you use the Logic 247 alerts as they're intended, okay, they will help you learn to read the chart far quicker than just trying to figure it out on your own. See, Michael and I have been at this a long time. We've made a ton of mistakes over the years. Now we're not ashamed of that, embarrassed. We just, did the best we could. But here's the good thing. When you become a member and learn how to read the charts and read our indicators, you don't have to make the same mistakes that we make, because we already made them for you. And we'll caution you and warn you and show you and teach you. It'll save you a lot of time and a lot of treasure. I promise you. Alright, after the NQ, we got crude oil, which is on a rampage today. We did have crude inventories today, which I never looked at. So, here was the open. Now, I drew this window yesterday, and I drew it all the way back. This is Wednesday, Tuesday, Monday. Okay. Let's see how we found resistance. Then once we got above it on the pullback, the zone was support, then resistance, and we overshot it a little bit. Now that window I drew, we only made it partly way through. What was the low of that candle? 64.57. The top of the window, 66. That's only 9 ticks. Okay, it didn't fill the window completely. So sometimes that happens. Okay. Red and falling turned to blue and climbing. That sent price back up to the BBC. And now notice when the step line crosses, see on the way down, you had price falling, you had the black step line, and then you had red and falling, and they're parallel to each other till right here. That changed at the open last night. The step line crossed red and falling, and when that happens, we expect a retracement back to the BBC, and there it is. So we consolidated for a few hours, then pushed our way up to the weekly zone, which yesterday was good support, today was good resistance, sent us back to the BBC. This was a huge red candle all the way down, but by the time the candle closed, where was it? Back above the BBC. So that pullback held. And then 5:30, crude took off. Got through the zone, got through the long target. Now the long target was based off this bearish cross. So live in real time as it was happening, it might have struggled here for a little bit. You can find out if you just go look at a 1 minute chart. But we did trade through it, and then we got through the zone. The step line has crossed, but crude's still climbing. See, once the step line crossed and blue and climbing got directly above price, we would typically get a retracement back to the BBC. But that hasn't happened. Now the highest weekly zone this week for crude, we still got the rest of the day, Thursday, Friday. It's way up at 69 bucks. And the way things look, we just might see it. Gold. Now gold opened right here last night. This is the opening candle. It retraced up to the BBC, and then it dropped to the short target. Traded through the short target, but it didn't enter the window I drew yesterday. Now this short target was based off this bullish cross right here. Okay, so blue and climbing took us above the zone. Now it took 1, 2, 3, 4 candles to overcome the zone, but then this candle right here opened at 33.51 and ran up 5 points to the target. That's $500 per contract traded in that one candle. So then we pull back to the zone and the BBC support ×2, which sent us looking for resistance, and which, by the way, filled the window I drew in yesterday. Okay. resistance at the top of the window based upon where blue turned to red, sent price back to the BBC in the top of the target. Keep in mind, hang on. Okay, I gotta hurry up. So price ran up, ran back down to the zone, support. In the 8:30 news, sent it sky high, back to support, resistance. Now we just hit the short target. Remember, we hit it early in the session, and we just hit it again. Last market, silver. Here's where we opened last night, and on this candle right here, we filled the window that I drew in yesterday, and then we hit resistance at the zone. Resistance sends us looking for support. We found it at the short target. That bounced us up to resistance at the BBC. That sent us all the way down to this zone, okay, which bounced us back up to this zone, which sent us back down almost to this zone. Support sent us to resistance, back to support, back to resistance at the zone, back to support at the zone. I mean, for 15.5 years, we've published these zones every Monday for our traders and trial members. I've had so many of our traders tell us they wouldn't dream of trading without the zones. I wouldn't dream of it. Anyway, that covers all the markets. Now I'll give you a quick look at the ES. Okay. The Dow. The Russell. And I just picked up here with the NQ. So now if you want to see those markets explained in detail, like I just did with the other markets, just go to youtube.com/CFRN about an hour after this broadcast ends. Now, look what price is doing. What we just talked about on the NQ. With red and falling overhead, it's trading through the BBC. Now, it could very well find support here at the zone. But if it trades through the zone, then this window of opportunity, that could make your day. I wish I had time to hang out and just watch it, but I gotta run. Here's what the daily looks like. Remember, we took out these two highs that we've been talking about for a long time. Our next major resistance after the high of today is up here at this previous bearish cross. To become a member, go to mytradingiq.com. Watch the videos, read the content. When you're ready, send an email to support@cfrn.net. In the email, say, hey, I'm ready to become a member. Valerie will send you an email chock full of information about what it means to become a passport holder and all that you get. She'll also include a link that you can click to seal the deal. Number one, you're going to get 2 hours of live training every trading day in an interactive environment. Michael's putting on, taking off trades, explaining every trade he takes, the reason why, and the outcome, good, bad, or ugly. We don't sweep anything under the carpet. 9 out of 10 traders fail simply because they don't have anyone to teach them how to trade. So we've plugged that hole. 2 hours every trading day. On top of that, you get private one-on-one mentoring. The strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETF, it doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. That's how markets work. You'll also get the Logic 247 alerts around the clock. You'll get the concierge trade alerts the second they're published each evening. Monday morning at 6:15 a.m. Eastern, you'll get the weekly trading zones. And every Thursday afternoon, you'll get an invitation to attend the members-only workshop Thursday night at 8 p.m. Eastern. So if you've been on the trial, you should be getting an email today, again, explaining how to become a member. Do it today or early tomorrow so that you can be in the members only workshop tomorrow night. And last but not least, you get the golden key that opens all the private channels in Telegram. We got public channels, we got private channels, but as a passport holder, you got access to everything. And while you're on the trial, you can actually talk to our traders. Not just some hand-picked, superstars, but all of them. You'll have access to the trial discussion group. You can ask any question you want, and one of our traders will answer it for you. Okay? Probably several of them will. It's everything a trader needs, all under one roof, one low price. Let's wrap it up with our good word for today. Yesterday, we talked about how important it is to spend some alone time with God. Today is part 2. Psalm 63:1. You, God, are my God. Earnestly I seek you. American preacher Dr. Stephen Olford said, I want to hear the voice of God before I hear anyone else's in the morning. And his is the last voice I want to hear at night. Whatever time you set, morning or evening, be consistent. Make an appointment with God like you would with anyone else. And keep it. Don't stand him up. So, how much time should I spend, you ask? Number 1, begin with a few minutes and let it grow. Don't start with a 2-hour quiet time or you'll get discouraged. You'll create memories of failure rather than memories of success. You must grow in this relationship like you do in any other. Number 2, don't take your watch with you. That can ruin your quiet time faster than anything else. And don't bring your phone either. Decide what amount of time you can give to God's Word and prayer, then do it. Sometimes you'll spend longer than you've set aside. Other times it might be shorter. Remember, you're talking to the God of eternity. Don't insult him by continually looking at your watch or your phone. With God, quality is more important than quantity. It's what you do while you're with him that's important, regardless if it's 10 minutes or an hour. And number 3, have a special place. Genesis 19:27. Early the next morning, Abraham got up and returned to the place where he had stood before the Lord. Your special place should be somewhere you can pray aloud without embarrassment. Somewhere you're comfortable. Just don't do it in bed. That's too comfortable. You might fall asleep. As time goes by, your special place will come to mean everything to you because of all the wonderful times you have there with the Lord. And as you become comfortable with praying out loud, if you have a spouse, invite them to join you. Maybe just a couple minutes together each morning. The two of you come together in prayer and thank God for his many blessings. Ask him to guide you through this day, to do things that are pleasing to him. Man, it really sets the tone for your day. My wife and I pray together several times throughout the day. And whenever any situation arises that we don't know what to do, we hold hands or just sit next to each other and we talk to God and listen. That's important, remember. Listening is more important than what you say, because God already knows what you're thinking and what you need. And his word says that with faith, he will meet your needs. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell. Okay, that didn't work out. Let's try it again. We got it. Take care, and I'll see you tomorrow.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.